Disney analysts, financial investigators are saying that they're worried perhaps might not be a good earnings call after all, as Bob Iger gets ready for his final year at the Walt Disney Company. Folks, today we'll dive into what it is that has them so scared. Let's talk about it right now. Hello folks, hello friends, welcome back yet again. It's another video of excellence, and we're so happy that you're here. Keeping you ahead of the culture curve is what we do, and we do it with a zeal that even the Holly Weirds can feel. Tomorrow is the big Disney earnings call. Bob Iger will be there, you will be there. Valiant Renegade, that's the channel you need to be on at 8 a.m. Eastern. And then coverage continues on the Pro Channel immediately following. It's a full morning. Will Disney be mourning, or will they succeed yet again in pulling a rabbit out of their hat? Folks, we'll have the info. We'll get to it. But first, here's what the dread might be from analysts who say, Bob, where are you going to get the bread this time? Click the like button, and we'll dive in. At Disney, the headlines are not looking good ahead of the earnings call. Now, we can't tell you whether it's going to fly, soar, or fall. All we can do is tell you what other people are saying because we give no financial advice here. But Anika Masrani out of Tip Ranks says Disney reports earnings this week. Analysts expect muted profits as the Disney parks show signs of fatigue. Now, this really matters because there's anticipation that Disney might announce in the next month or two, maybe even at this earnings report, the next CEO of the company. Who would be most likely the next CEO of the company? Josh D'Amaro, who's head of the parks. If Disney were to announce Dana Walden, the only other frontrunner, then good Lord, look out. This company is in deep trouble. And that would be an anti-Wall Street pick. So Josh D'Amaro is, I think, far and away the best candidate for the role. If the parks don't look good at this earnings call, it's going to make for a very sour entry into the leadership of the company. Jonas, do you agree or disagree with that one?
No, I absolutely agree. I think that Dana Walden is probably very controllable by the board in some way, but she also is someone that ideologically aligns more with Bob Iger. It would be a lot more of the same, and I think an even lighter focus on parks than it's been recently, which the parks are, of course, the money-making engine of the company. And if they favor the Hollywood aspect over the parks aspect, they do that at their own peril. The parks are the future of the company because that's something that can't be replicated. And if they're just going to throw out a bunch more television, then she's got to go hire a bunch of people that make TV. Well, apparently that's pretty hard, but it doesn't seem like it's that hard. They don't have competition in that same way that they do in Orlando. So, I would say Dana Walden is probably Bob Iger's pick, and Josh D'Amaro is probably the board's pick, even though it probably needs to be Kevin Mayer.
So let's take a look at what they're saying is going to save Disney. And when we look at this, folks, you'll know that not everything is bliss at the House of Mouse. The Walt Disney Company reports fiscal fourth quarter results, aka the end of their fiscal year, on November 13th, and investors are preparing for what could be a telling update on the entertainment giant's transformation. Wall Street expects modest top-line growth, but muted profits as Disney's streaming momentum runs up against theme park softness and integration costs. The consensus estimate calls for revenue of $22.88 billion, up only 1.3% year over year, which would not match with the pace of inflation, therefore would mean a shrinking transactional power for the company, and earnings per share of $1.05, down nearly 10%. Disney stock has fallen slightly this year, trailing the broader market and its streaming competitors. Let's see what it's got done here. What's going to save them? What's the optimism? Disney's direct-to-consumer segment continues to be the company's growth engine. Oh, no.
No.
Oh,
that's
no.
Completely incorrect.
Oh, no. If this is what they're hanging their hat on. Oh, no. Management projected more than 10 million new subscriptions across Disney Plus and Hulu in the quarter, helped by the new Charter Communications distribution deal. Oh, no. They gave away free Disney Plus subscriptions to Charter subscribers, and they're going to claim that, Jonas? Culture, Marvin, Ron, what is going on? If this is the silver lining, look out.
This is horrifying when you if they think streaming is the growth engine of the company. Name one successful streaming service that isn't Netflix. It might be Hulu, which was built outside of Disney's usual ecosystem. It did better when Disney didn't have complete control over it. So ESPN would be the only other option here, but that is basically the life raft that they have constructed for themselves as cable continues to deteriorate. This huge bet into sports that they have made to say, no, we're gonna spend even more money to hold on to sports, as they desperately cling to that and try to say, no, I'm fine. No, streaming is not the future of the company. Streaming is a product that they have to offer. If they exited streaming entirely and rented their products out to other streaming services, that would be what I would call a growth engine for this company. Disney does not make good product for streaming. They never have, and I don't think they ever will.
No, that Prime would be a better. I think that's the only other example of streaming where you have it coupled with a lot of other benefits that go along with being a member of Prime. And of course, now, if you are a member of Prime, you have to pay extra if you want to be off of the ad tier. And there's just nothing. Disney Plus doesn't have the value that clearly Bob Iger wanted it to have, and the parks, in my opinion. They've become kind of the last bastion of the mall, the shopping mall, because people go there. It's sort of to ride rides, but really, when you turn around, every single place you go in a park, there is merchandise to buy. The merchandise and the food are talked about. It seems to me far more than even the attractions or the entertainment, and they've cut back so much on the entertainment in the parks, which was the flagship of what going to a Disney park used to be about. The streetmosphere entertainment, all of that. The fact that they have shifted entertainment to the streaming service and taken so much money away from entertainment and the experience that people have in real life at the parks. That's why people go there. It's just incredibly disappointing to me, as I would say that I'm a lifelong Disney fan, except that fandom has slumped incredibly since the year 2020. And, especially with just seeing how the parks have diminished. And so if they're putting all of their eggs in the streaming basket, I think they're making a big mistake.
That's great points, Ron. And, I want to temper expectations out there for people, because you need to be on the Valiant Renegade channel on Thursday, 8 a.m. Eastern, and you need to check out our post analysis on the Pro channel as soon as that's over. But, temper your expectations, because it was not so long ago that we looked at everything that was happening at Disney and we said, where are they going to get any kind of win? This is a nightmare quarter for them. And then they came out in their earnings report and said, by the way, we're building a new theme park and it's free. And of course, that's not real. That was what they announced, right? What's really happening is that in Abu Dhabi, another company, what's the name of the company, Jonas Marvin? What's the name of the company?
Yas Island is the complex, and Miral.
Yeah, it's in Riyadh.
Miral. Yeah, Miral. Okay.
Which is basically the government out there. So
right. So the government of Dubai is building a theme park, and Disney said, we'll give you the licensing rights to it, and you can call it Disneyland, and you can have Mickey Mouse and all that. And they said, great, we've been working on that forever. Here's a giant load of cash for your Mickey Mouse stuff. And then Disney said, we're building a new theme park, and everybody gobbled it up. So listen, there's nobody better at managing the messages of PR across all of the markets than Bob Iger. I don't know what they're going to come out and say this time. Maybe they'll declare that they're doing, everybody's going to get a Disney cruise line parked in their driveways and their garages across America. I don't know. But I can tell you this paragraph scares me more than anything. Real quick, this paragraph is the terrifying part, Culture, and then rock on with it. Yeah. Content, get ready, you won't believe this. You may fall out of your chair. Content engagement also helped retention. Talking about streaming and how successful it's been, Culture. Marvel's Fantastic Four First Steps hosted Disney's best 2025 opening weekend. While new streaming releases like Eyes of Wakanda and Only Murders in the Building Season 5 sustained demand on Disney+.
What?
Analysts say a rebound in streaming profitability could offset slower growth in other areas.
Was
What?
This written,
Yeah,
was this
that's
written by Disney PR?
Yeah, it must be. This is.
I'm sorry. Nobody even knew that Eyes of Wakanda came out.
Yeah, I didn't know. And look, I think nothing charted, did it?
I think Fantastic Four might have hit a sub like the original movies. Might have
Original, maybe. I'm looking at it and I'm going, okay, well, Disney's most profit, and I'm going to say that skeptically, in streaming was $47 million. And that was because they combined ESPN Plus, they combined Hulu, and they combined Disney Minus. They combined all three of those things to get $47 million. If they have a halfway decent movie, $47 million is, it is coming their way. If they have, a new park attraction, that is worth anything, they got $47 million just probably through the previews alone. So when I start thinking about this, I'm like, this is the worst way to try to make profit. And as Pro suggested, the best thing they could do is go back to what they used to do and sell everything to Netflix. Netflix has the operating income to consume this and redistribute it. I mean, I think they went from $5 billion in content to, I think they upped it in the last quarter. I think they're sitting around $7 billion in content spend. And look, you should be taking advantage of your competitors. You shouldn't be trying to compete with them on their playing field, which I think everybody here says Netflix is the playing field. So what are you doing? Because it's not in the stockholders' best interest, and it hasn't been. It looks like Disney's choosing to make the wrong decision on everything right now. And we talked about the gambling thing that's going to bite them in the booty, and maybe the streaming of the sports will help them. I don't know. But when I look at what the future is and who's investing in that, it's not Disney. So I'm not expecting them to have a boomerang recovery of any kind. I think when going into this, I think Pro, despite the fact that you aren't willing to say it, perhaps this is the lost quarter. We'll see.
Listen, I'm careful because I know that they can make stuff up.
Well, they did.
Yes. I mean, and I'm not accusing them of anything illegal or professionally unethical. But
except
there's no companies do this. At the same time, they're talking about culture. They're telling us in this article that Disney had the best. I mean, their streaming is going to carry the day. They're admitting that the Disney parks are struggling, like we've told them. But now, culture, they're telling us streaming is going to be great. And Disney just said they're not going to report streaming numbers anymore.
No, they can't afford to. And churn's about to hit them in the pants because when they announced this giant increase in price, even the people I know, that are using Disney Minus are no longer going to be using any kind of bundled service from Disney. It's too expensive. And people are out, man. Entertainment dollars don't exist anymore. The economy is not at an apex right now. And this is, none of this is likely to, nothing Disney has to offer is going to change their mind. In fact, they don't trust the studio at all, which is why all their films have been sucking rocks at the box office. So
they're down right now at the time of recording, 17% in the past 5 years. Yeah. 17%. So this is a company that has struggled greatly at meeting expectations. And I'm not hearing a lot of extreme excitement right now. Just to give people an idea of how that compares, if you had invested just in the S&P 500, generally, right, the top 500 companies that are publicly traded, folks, you'd be up 91%. There is a chasm between Disney and just the average results of the other top 500 companies. Disney's actually pulling the S&P 500 down, and this is about to get so much worse because guess what? They're about to be compared to the Bob Chapek years. They've got like a month before they're compared to Bob Chapek. And when that happens, it is going to be a very ugly 2026. No financial advice given. Maybe it jumps up, maybe tomorrow. They tell us that they've invented a brand new kind of way to inject Disney straight into your veins, and it's going to make them all kinds of money. I don't know. But unless they get a huge jump in the very near-term future, it's going to be a rough 2026. Panel, any other thoughts on this one?
Are they going to talk about the Disney the new what's
Disney
it called?
Living?
Yeah. Is that
They
what they're going to
probably
promote?
will actually. That's about to premiere, but if that's the future of the company, then the company is essentially getting into real estate, and there's no reason to pay that much to be there. It's yet another exclusive add-on that gets them away from the theme park space, but is not profitable. I mean, Celebration, I think, was profitable for the company, but widely viewed as a failure of between intention and reality here.
Right.
And by the way, the thing that they're trying to say is going to be the big thing at the parks is holograms and robots. Well, if that ever becomes a thing, that is a very long way away.
They're going to, I think, try to play the made up numbers game by adding in the Hulu numbers to streaming and try to pass that off as a success. Plus ESPN, because they just launched that new ESPN service that everybody has now, right? So it's going to be a lot of wacky, magical Bob Iger math, complete with questions that aren't questions from robots.
Mm-hmm.
You know what we need to know right now? What are the Pelosi's doing with their Disney stock if they own it? That's what we need to figure out. That's what we need to figure out. Yeah. Folks, they are claiming that streaming is doing great. If that is the defense going into the earnings report, I don't know what that says about the parks, but it could say that we've been right. We've been telling the truth about attendance. Get ready, get set, because this is the kind of thing you don't want to miss. Again, Valiant Renegade, 8 a.m. Eastern, Thursday. Tune in for the Disney earnings report, and then we'll have post-analysis of what went down, good or bad for Disney. We'll call balls and strikes on the Pro Channel, a specially timed Pro show earlier than the norm, going as soon as Valiant Renegade finishes up. We'll be there as well. It's all day, every day, giving you the coverage you need to know. Put this baby to bed. This video is over. Turn off the lights, but not quite yet, folks, because we do ask one final thing before we say goodbye, and that is, would you consider clicking the like button, share, subscribe, click it and stick it to those algorithms. It is the notification bell, and drop a comment down below. Also greatly appreciated, anytime you would like to share this out on your favorite social media platforms, well, we would love that, and we'd also love to hear your thoughts. Folks, drop a comment down below and use that beautiful mind of yours. If you would not mind, we'd love to know what you're thinking. Also, if you would like to become a member of the channel, it's as simple as clicking the join button. It is the price of a soda per month, and you'll gain access to all kinds of new, cool, exclusive information. Folks, until the next time we have the honor of spending time with you, keep learning, keep growing, and as always, keep having fun.
Jump into the water. Why listen to music made by people and companies who really don't like you? Check out Vacation Radio today and prepare for all new content made by the people behind the WDW Pro Channel. It's the place you need for all the music. That should be fun. Hundreds of songs, every genre you can imagine. Listen live on YouTube and enjoy a set list that's always sunny. It's Vacation Radio. What are you waiting for? Every WDW Pro video has a link to Vacation Radio in the video description. Try it out and subscribe today.